I'm mistaken.
I'm not mistaken. Okay. Good.
Welcome everybody to the stream. Today we are here, gathered here on this beautiful Saturday to begin our biweekly live call on beginner trading strategies. Austin, would you like to introduce us?
I do hear some noise coming from somewhere.
We appreciate the background noise.
Yeah, it was a nice little guitar that was playing. Yeah, I mean, so today we're going to be talking about beginner trading strategies, as I said, before. But I guess now that the stream is going, we should formally introduce it. Welcome, as Logan said. But yeah, so today's going to be pretty fun. We have a lot of stuff to go over, and there's some rather simple things that we're going to be talking about that will really benefit you and assist you in developing a strategy of your own, right? We're not really putting these strategies out here like, go do this, just do that, right? Take this information that you're learning today and, absorb it, apply it how you want, what fits your style of trading, and just, take it as something to benefit you guys. So, yeah, we can go ahead and get started.
Absolutely. I really would like to just add on to that. This is not, telling you guys to go out and necessarily trade these strategies full time, but you should look at them, see what you can take from them. Maybe you can implement something from them into your own trading strategy, or maybe you do want to start using them by yourself, which you absolutely could, because all of these trading strategies are fantastic and can provide you with, consistent gains should you be using them and utilizing them properly. But as always, we appreciate your time. We appreciate your attention. Thank you for coming out, especially on a Saturday evening. And like Austin said, let's get right into it.
All right, so the first thing that we always do when we kind of come into these educational classes is we like to kind of give a definition of the topic at hand, right? And maybe some people obviously a lot of people know what the general idea of a strategy is, but it's really important to drive home that idea because that's what we're doing, right? We're developing a strategy. We're trying to get a strategy that will help us make money and be successful in these markets, right? So obviously, you can see in the slide that we have here, in order to be successful in any life endeavor, right? Not just trading. It's very important to do that. Oh, I don't know what that is, Logan. There we go. Yes. Not just in trading, right? I wanted to make sure that it was like any life endeavor that you do, you want some kind of plan. You want some kind of will go a very, very long way, right? You want to have a plan, and if you go into these things without a plan, without kind of knowing what you're going to be doing, you greatly increase your risk, and that is your risk of failing, right? So strategy is definitely something that you want to have. And here I just have the definition pulled from, I believe, Oxford's dictionary, right? A strategy is a plan or action, plan of action or policy designed to achieve an overall aim, right? It's just something that you're developing to achieve goal, right? What is your endeavor? What are you trying to achieve in these markets, right? And that's to be successful and to make money. It's hard to understand what a strategy is, and that's a really good definition of that. I like that definition. Going to the next slide here.
Austin, can you hear me okay?
Yes, I can hear you. Yep.
Okay, you're just coming through a little bit choppy on my end, so I just wanted to make sure.
Oh, okay. Yeah, coming through choppy, feel free to let me know. If people need
It's choppy. It's choppy.
Okay.
We're both choppy.
You all sound choppy. I don't know what's going
Yeah, you
on.
sound choppy as well now, Clayton.
Everybody sounds good on my end.
Everyone sounds good on the end as well.
Yeah, little technical difficulties.
Probably a Discord thing, but I guess for right now we can roll with it.
Yeah, I mean, if it persists, we can try to, perhaps pause and try to figure that out. But if everybody can hear me okay, then we'll...
If this is a problem, we can always move over directly to Google Meets, Austin and I, and we can just stream directly to YouTube. But it looks like we may be getting better now.
Can you hear me okay, Logan?
I can hear you better.
Sounds good.
Okay, ready to roll. So,
Yeah.
moving into components of a sound trading strategy. These are some things that I think every single trading strategy really needs to be sound and something that you can go back to day in and day out and utilize it. And those things would be entry rules or entry parameters, exit rules, risk management for that individual system because it will vary depending on your system, and a grading system. And I know me and Austin go about our grading systems a little bit differently, but how I'm using my grading system is on an A to F scale for each entry that I'm taking. Austin, I know you wanted to quickly touch on how you grade your setups.
Yeah.
Can't even hear Austin now. We really appreciate everybody's patience. Discord seems to be having a little bit of an issue, so we're going to be moving it over to Google Meets so Austin and I can continue. Hello, sir. Are you there?
Yes, I'm here. Can you hear me?
Oh, I can hear you. Fantastic.
All right.
Again, for everybody on the stream, we apologize. Seems to be Discord having an issue. But we are here.
Are you going live on YouTube right now? We're
I
on
am
YouTube.
still live on YouTube.
Okay, so Discord's... Should we leave the Discord?
Yes.
Okay, I'm going to leave the Discord. We should probably give people a few minutes to kind of join up. That was kind of sudden.
Sure. Very strange.
Let's provide a link to YouTube
I did just now.
into live chat VC mute.
Hi, Zach. You can still hear him now, Robotic, or is that from prior?
Okay. Technical issues.
What an
happen.
annoyance. We've never had this before.
No, it's never been this bad.
Cool. Well, we're all good now. So if you would like, we can just continue, and people can flow into the stream as they can.
Yeah, how many people are on the stream right now? I know we had a good amount of people in Discord. I'd give them...
We have about 14 right now, so definitely not the same.
14. Okay. Okay, that's not bad. All right. Yeah, we can get started. Let me go ahead and view your screen so we're both on the same page. Okay, so Logan, do you want to talk about components of a sound trading strategy again, or do you want to just move on to the next slide and go ahead and get...
No, I think we
go
should
in with
dive
the
into
strategies?
these. I think we should dive into these.
Okay, let's do it. Let's hop into the first one.
Cool. Okay, let's go into entry rules. So this can range from a lot of different things, and the best way that I can visualize that and try to tell you guys is think of it in terms of how we're grading our entries in OBR, whether that's an EMA crossover, whether that's an engulfing candlestick, whether that's divergence from an RSI or from whatever indicator you're identifying divergence on. What it is going to depend on the indicators that you're using or the chart patterns, whatever it may be. An entry rule may be the break of a support and resistance zone, for example, or many other things. Austin, do you have any notes on that?
Yeah, just having some sort of confluence, to give you like the go-ahead on should I take this trade or should I not, right? That's the biggest thing, right? Having confluences.
Yes. And the same thing goes for exit rules. That's going to be whenever your trade is invalidated. We've touched on this in prior calls, but really that is, again, going to depend on your system. So if you're trading a wedge, for example, it's going to have a different stop loss than a channel, and that's going to have a different stop loss than an EMA-based system. So it really depends on what system you're using and where you have your exit, which says this trade setup is now invalidated. I'm going to move into the next one. I'm going to take my losses and move on.
Yeah, I love what you said, right? Kind of understanding, recognizing, just knowing when your idea is invalidated is going to go a very long way when it comes to trading a market, especially like this, right? Knowing when to get out, knowing when you're like, okay, you kind of admit you were wrong, let's limit the losses and move on to the next one.
Yeah, absolutely. And risk management, I want to hear your thoughts on this before I go in, Austin.
Yeah, I mean, everybody's risk is different, right? Everybody has a different risk profile, and it's really just about managing yourself so you can live another day in the market. Obviously, if your risk is a lot higher than a lot of other people's, then you're going to be looking for a higher reward. If your risk is less, then you'll be looking for lower reward, right? Everybody's risk is different, and how much risk they're able to take on. But regardless, right? If in a very sound trading strategy, you need to understand some level of risk management, right? You need to understand, when am I going too much? When is this going to be, too big of a risk for me to take? Understanding this general idea of what your risk profile is huge, right? And it's different for everybody, unfortunately, right? I wish it was just cut and dry, cookie cutter for everybody, but, it's really about finding what fits you. I don't know if you have any thoughts on that.
Definitely. You are, and I completely agree. It does depend on you, but also in terms of a trading strategy, This also plays into my grading system. For example, again, I said I graded on an A to F scale. If I see an A setup in my Forex trades, for example, in that system, I'm going to risk 1.5% of my total account balance on that trade. If I find a B grade entry for that same system, I'm going to put 1% on. And if I see a C grade entry, I'm going to put 0.75% of my account on. And that also is varying depending on the different markets I'm trading because I'm trading different systems. So I think it is dependent on your system, but it also, like you said, is dependent on you, what you can psychologically handle in terms of a risk, and also what is best for the system and how you're trading at the time.
And I like kind of like the idea of a grading system. I think it's quite funny because it's like, you really only want to be taking the grade A trades though, right?
Yes, it goes into a deeper conversation than that, but yeah.
Yeah. But absolutely.
That also depends on trade system, right? Because sometimes
right.
C entry will still work out well, depending on your system, of course.
Right. So just understanding these components, right? Just kind of checking off these boxes, knowing that you address these is very, very important for sure.
Definitely.
Yeah.
And if you don't understand every facet of these 4 things or have some idea of it in your system, then you don't entirely understand your system and you are not trading it to its full efficiency.
I couldn't agree more. Absolutely.
Yeah, before you go into a trade, you need to know entry rules, right? Where you're going to get in, exit rules, where you're going to get out, risk management. How much can I lose if this trade goes to shit? So,
and then the quality of the trade.
Absolutely.
Observation, which is your grading system. Yeah, absolutely. So, kicking it off, right? Getting into the strategies. And again, guys, we're staying rather simple here, but these are the strategies, man. That is like this is the core of pretty much everything me and Logan do, right? Understanding significant support and resistance zones is just so big, right? Understanding when a support is broken, when a resistance is broken, knowing when we're out of a current trend can go a very long way in understanding future price action, right? So that's what we're going to go ahead and look at here. And I believe I have around 4 examples to kind of showcase here. Great. So this is the 1-day chart on Boeing, right? Ticker symbol BA. And Boeing is rather interesting, right? Because as we've noticed, it took a very large hit from COVID back in March of 2020, and it took, it kind of got back up there. It took a little under a year to kind of re-enter its trading range. But you could see that if you were to completely take COVID out of the situation, Boeing has been in this descending channel really since late 2019, right? Late 2018, and it's been acknowledging very, very consistently the resistance tops, right? The top zones and the support level, right? Just realistically, any of these top or bottom of the zone has been acknowledged very, very consistently from Boeing and has been made for wonderful, wonderful trading opportunities, not acknowledging anything else, right? You can see all the red circles are points of resistance where we've seen a rejection, and all the green circles are points of support where we've seen a bounce. Right, and it's been so consistent, and I know me and Logan have actually been able to trade Boeing a multitude of times successfully just off of this this one trade, this one chart right here. Logan, I don't know if you have any comments about Boeing, kind of how consistent it's been following this channel, but it's quite remarkable.
It is quite remarkable, and Boeing's actually provided a lot of really great trading opportunities that we have personally taken from the same trading range. So it's very nice to see this. And just so you guys have an idea, when we're looking to play this, how I would play it, and I'm curious to see if you would play it differently, Austin, is when we get to a red area here, one of Austin's red highlighted circles, I would look for a rejection of this zone, confirming that it is still acting as resistance. That would be my entry. My exit would be on the break if we did break out. Again, I'm looking at a sell situation here. So if we went to the high of this downward trending channel resistance, I would place a sell order on a rejection of that level with a stop loss above the resistance line. Because if we break out, that means the trade's invalidated, right? And the take profit could be really a multitude of things, and a really great one, an ideal one, would be the lower bound of this downward trending channel. That would be the textbook.
Yeah. That would be the textbook, yeah. And it's offered many opportunities to do that, like over and over again, right? To just go short at the high and then sell at the low, and vice versa, right? Every time we've kind of touched the bottom range, it's been a great opportunity to go long, especially if you had patience.
Absolutely.
And then you acknowledge these points on top of all your other confluences, whether those be indicators, other manual analysis, moving averages, whatever it be, fundamental analysis, right? You're looking at the order book, you're looking at options flow. You acknowledge this kind of core fundamental I don't even know how to describe it, like a feature of this chart, and then you apply it. You apply all your other confluences on top of it, and it can make for a very, very powerful trading strategy. So
Yeah, absolutely,
Yeah.
absolutely. But the main strategy here would be the bounce
Mm.
of a support or resistance zone.
Absolutely.
Yeah.
Yep. And we have plenty more examples going in here in just a moment. Yeah, so this is NVIDIA, right? A very popular one. I know a lot of us in here love to trade NVIDIA and other semiconductors, such as AMD or TSM or what have you. But we can see that NVIDIA, since late November or mid-November, it actually made a high at around, a little above the 340, 350 range. And then since then, it's been fighting, right, battling this descending resistance, and it's been unable to get over successfully thus far. And every single time, right, as soon as we kind of got the second, third touch point, right, this resistance level has been very, very prevalent, right, and has made for some great trading opportunities. You can actually see the two most recent points there. I know NVIDIA just had their earnings, and we actually saw a big pop-up to that resistance level right before earnings, and the earnings dropped it down. It's almost like the technicals predicted the earnings, right? How funky is that? It's almost like we talk about that often. But no, in NVIDIA, another really good kind of just acknowledgement of structural support and resistance, in this case being resistance for NVIDIA, has given many, many great opportunities to play to the downside. And obviously great opportunities to perhaps play to the upside, right? If NVIDIA were to break out of this, then that could be a great long opportunity, if and when that were to happen. So
Yes, definitely. And I would definitely categorize this as a beginner trading strategy because, all you have to do here is identify support and resistance, look for bounce and breaks. Very, very simple. But something important that I wanted to mention about this strategy that we're referring to right now is that it can be used on any time frame at all. So we're going to treat time frames differently, right? A daily support or resistance zone is not going to be the same as a 1 minute support or resistance zone, but each time frame can be utilized to trade the system.
absolutely, absolutely. Oftentimes people will do these, these classes talking about patterns, talking about how to use moving averages, how to do this and that. Guys, really anything that we talk about here, especially when it comes to trend lines, pattern recognition, or any of that, it can be utilized and observed on any time frame chart, whether that be a 1 minute or a 2 month chart, right? So this stuff can be acknowledged on any time frame.
Yeah, and just, to get an idea, Austin, what is your favorite time frames to use this system on?
It depends on what kind of trade I'm taking, really.
Yeah, absolutely.
But I like observing every time frame, right? Finding support and resistance on every time frame. If I'm day trading, then obviously I'll be looking on smaller time frames like the 1 minute, the 3 minute, the 5 minute, 10 minute, 15 minute, and I'll be looking for significant support and resistances there. But again, if I'm looking for, to understand what's going on in the bigger picture, I'll end up zooming out to, the 30, the 1 hour, the 4 hour, the 1 day, right? You're even higher. So yeah,
absolutely. Great.
Yeah. And we have, yes, and then here we go. This is another textbook example of support and resistance zones. This is AMC, everybody's favorite meme stock, if you like GameStop or Peloton, right? Peloton's now a meme stock, at least over at OBR. We can see that, AMC had that, we talked about it for such a long time, right? That $20 level is going to be so very significant in the lifespan of AMC, right? After this big cool down from that massive pump that we saw earlier in 2021. And you can see that it bounced off that $20 zone twice, very, very confidently. And then we ended up seeing the cross there where the purple circle is. And then ever since we sort of broke that support level, we've been seeing very, very bearish price action. And actually just up until recently, we saw two projections from that line that we recently had as support, right? And both of these levels, all these, if you just acknowledge these levels or that $20 level for what it was, it would have provided many, many opportunities to go both long and short within, a rather short period of time.
Yeah.
So, yeah.
And I just wanted to quickly walk through how I would go about trading this. So moving left to right, you see the first two green support points. That would be where I identify this is an area of support. This is an area I want to keep an eye on. You then see highlighted in the purple circle, this is where we break. This would be my first entry on this. I'm not sure, Austin, if you would wait, but this is when I would get my first entry in because we have a clear break of that support level we just previously identified. Your stop loss in this situation could go back above the high if you were going to be aggressive, or if you'd give a little bit more room just in case it's conservative and moves around a little bit. You could even set it above, perhaps just below the $24 range because that's the last high we had before we moved lower. And then after that, you can use take profits at multiple risk points, or if you notice further support, you could obviously get out there, or area of where price is stalling. That's also where market context comes into play. Me and Austin talk about market context a lot. And then moving farther right, you can even play another bounce on this. I would set an alert perhaps at this zone, because we already know it acted as support, most likely going to act as resistance, and you see that's exactly what happens. So you could set an alert on TradingView or on TD, wherever you set your alerts, and in this situation, I would play to the downside, again, with the stop loss going above the resistance zone, because now it's acting as resistance, and the stop loss would be invalidated if we broke that resistance, right? And the same thing would go for take profits, as I just said, and you could do that twice, so...
Absolutely. Yep, that's a wonderful way to play it, and I agree with everything you just said. And going into the last slide here, displaying support and resistance points, I added other indicators, right? Something that I would use to actually take this trade, right? So we said that support and resistance levels are significant on their own, but you want to add other confluences, right? And so this is a 5-minute chart of Peloton. This was the other day during trading, and this was a wonderful trading opportunity. We saw Peloton bouncing on the support level around $31. And then we also see a nice indicator I like to use, and I know Anderson and other analysts in OBR like to use, which is the open range breakout, right? And it kind of showcases where the opening range of that day's, the highs and lows of that day is. It gives you these two lines that show the opening range breakout, right? And you can see that it lined up very nicely. The bottom range of the opening range breakout lined up very nicely with our support level. So you have two confluences saying that this 3160 level is very, very significant. And you can see that as soon as we saw a drop below that, right, and you knew that we were bearish because we were also below significant moving averages. That's what the moving averages you can see there are. As soon as we broke, we saw a very, very aggressive price action to the downside. We actually went up and tested that previous support as resistance one last time, gave it one last tap, and then we ended up aggressively dropping down from there. It really didn't stop. I believe Peloton, we actually went lower that day, but in this example, we only have so much price data. Logan, do you have any thoughts on this chart? I mean, it looks, rather textbook. Yeah.
It's beautiful. No further thoughts.
Yeah. All right. Sweet.
Cool. So we're going to go into strategy number 2. This one is more indicator-based, more mechanical than the last one, and this one is going to be divergence reversal trades. So this strategy is a macro trend continuation trade, but it is a micro reversal trade. So the time frames that you can use on this is 2 time frames in particular. You need to use 2 of them. One to get the higher time frame trend, and the other one to find the divergence and the entry. Most of the time, I'm using the 15-minute and the 1-minute. In an example here, I use the 4-hour and the 1-hour. The indicators that are used for this one is an RSI with a 14 period, an oscillating indicator of choice with standard settings. That can be a MACD, that can be a stochastic oscillator, and a 50-period exponential moving average.
I do want to say one thing before we continue here.
Yes.
I know many of you guys probably do use TradingView. Most of the stuff that we're going to be talking about, when it comes to a technical standpoint, such as these charts, right, showcasing the settings of an RSI or a MACD, this is on TradingView. So if you're doing your charting on, let's say, Webull or Thinkorswim, it may be a little bit different when trying to apply these things, right? So just keep that in mind.
Definitely. But if you're not on TradingView, get on TradingView.
Yeah, if you're not on TradingView, get on TradingView. Yeah, I couldn't agree more.
So the parameters for this system is going to be price is correcting upwards in a macro downtrend, and you'll see what I mean a little bit more when we get into examples, or vice versa, obviously, correcting downwards in a macro uptrend. There's 2 confirmed touches of divergence on a lower time frame. Price on the lower time frame, where that divergence is, breaks through the 50-period exponential moving average, and the oscillating indicator of choice is trending in the direction of your trade. So divergence. What is divergence? Just to quickly go over it. First of all, we went over this in a very detailed way in prior biweekly live calls, so be sure to check that out. But divergence, just to summarize it, is a disagreement between price and an indicator, which would lead to a reversal of price, most likely. Not all the time, obviously, most likely. So the indicator that I'm using for that is the RSI. And the entry for this is when price breaks through and closes through the 50 exponential moving average on the lower time frame, and the rest of the parameters mentioned before are met. The stop loss goes above or below the last set point. When I say set point, I'm referring to a higher high, lower low, higher low. And the take profit for this one is set on risk to reward levels. So at 1R, which we'll go into risk reward levels in the next couple of examples you'll see. At 1R, I'm moving my stop loss to break even and taking partial profits. That can be 1/3 of the position. That can be 1/2 of the position. At take profit 2, that is at 2R, I'm closing more profits and leaving more runners to close at further risk reward levels, like 3R, 4R. And here's an example we're going to go into. Here's a macro trend right here on our left side, as you can see, the 4-hour chart. And we're looking at this white box. That's what I'm highlighting here. We're looking inside there, and that's what you can see on the micro time frame. So on the macro time frame, you can see we are clearly in a downtrend. And then as you can see, we then move higher, where I have highlighted wave 4. That is our micro correction, right? So we're looking for a continuation to the downside, a reversal from our micro trend, which is a bullish wave, it seems. As you can see on the 1 hour, price is staying at the same level, highlighted by this thick white line. And then on the lower part of this screenshot is the RSI, where you see prices are falling. The RSI value is falling. That is divergence. That is exactly what we're looking for, and that leads us into this next slide, where you'll see after that divergence is set, we have 2 set points. The MACD is trending lower. The MACD is what I use as the stochastic oscillator of choice in these examples. The entry is at the break of the 50 exponential moving average, highlighted by this blue color. The stop loss goes above the last set point, which is right here, or right here. Stop loss is right there. And then the take profit in this example was not exactly highlighted well, but it goes into, you could have set it, honestly, at this last support here. The first take profit would have been probably around this area. We'll also look at the risk to reward example. And Austin, feel free to cut me off if you want to add anything at any time.
Yeah. Well, I was going to say, I think this example is wonderful. This is on the S&P 500, if I'm not mistaken.
It is.
Yep, SPY. Well, this S&P 500 ETF. And, I love how this kind of jumps in perfectly from what we just talked about, right? You could see some pretty clear support and resistance levels that Logan has displayed, but he's using other confluences to really give him like a down pat idea of what's going on. And in this case being the divergence in price and his secondary indicators, right? So he's not only observing that, but he's observing significant structural support and resistance levels, right? Mainly being that big blue line that you can see right there, right? So it's a really, really good way of looking at things. Yeah.
Awesome. So here's our next example. In this example, we are using the 15-minute and the 1-minute, which is the time frames I'm usually using. And I swapped it, my apologies. Micro time frame is on the left, macro is on the right. So as you can see, we are in an uptrend in the macro time frame. We then gapped in this white box, and that is what you see on this left side on the 1-minute. You see that we are playing this to the downside. We'll see in the next screenshot. But prices are rising here. And then the RSI value is obviously dropping. This is divergence. Right after we have that divergence set, the MACD is crossed and trending in the direction of our trade at the time of the entry. We entered on the break of this 50 exponential moving average, again highlighted in blue. Stop loss goes above the last set point right here. And as you can see here is a better example of using the risk to reward multiples as take profit levels. And just so everybody knows what risk to reward levels are, it means that when you are risking, one risk to reward means that you are risking the same amount that you are potentially gaining. So let's say you're risking $500 on this trade. Your stop loss, if it fully got hit, which it usually doesn't, because we close our trades early if they're heading in the wrong direction, would be a loss of $500. At 1R, that is when you are up on the trade $500. 2R is when you are up $1,000. I hope that makes sense. Very summarized. But take profit 1 would be at 1R. Again, at this level, you can move your stop loss to break even. You could take off a half of your trade. You can let the rest run to 2R, where you do the same thing, move your stop loss down, take more off the table, and that's a great way of scaling out of this system. Any notes, Mr. Austin?
Ooh, my apologies. Can you hear me?
I can hear you.
Yes. I think you summed it up wonderfully. My bad.
No worries.
Yes. Awesome. Okay, and that's leading us to our third trading strategy, which is perhaps one of the biggest ones, in my opinion, to start understanding and to start implementing into your trades. And I guess this could have been touched upon, right, along with support and resistance levels, but that is pattern recognition, right? So pattern recognition is something that every new trader gets into, right? If you're like on Instagram or on TikTok or whatever, Twitter, some social media app, right? You'll often see people like saying, "Oh, this is a triangle," right? And the triangle breaks out, right? And it reverses, right? And it's true, right? These patterns, though they kind of are cliche in the world of trading, they're actually very, very significant and can give you a very good idea about what's to happen next, right? Not very many things kind of give you a leading indication of the future, but understanding patterns and pattern recognition can certainly do that, right? Especially with reversal and continuation patterns. So while the world of price patterns is rather large, today we're going to be going over just a few that might be able to help you out and some good examples.
Absolutely.
So yeah, Logan, do you want to kick it off and then we'll kind of just rotate?
Yeah. We'll
All
go
right,
with our standard way of operating, I guess. So our first price pattern that we're going to look at is the symmetrical triangle, which, as you can see, is a connection of two trend lines, which you may guess resemble a symmetrical triangle. So we have two set points at least, again, for our support or resistance lines. We have also touched on support or resistance lines in prior videos and support or resistance zones. So if you need a little bit more clarification on that trading strategy we were talking about earlier, be sure to go watch that biweekly live call where we go through and how to draw them and how to use them again. But for a symmetrical triangle, we're looking for, again, a symmetrical triangle is actually very interesting because it can be a continuation or a reversal pattern. It's not necessarily one or the other. As you can see in this example, it is a reversal pattern. The entry for this would be on the breakout of the support or resistance line, and the stop loss would go at the adjacent support or resistance line. So if when you enter this trade, you'd enter when we break to the downside, and your stop loss would go to the second touch point of the upper resistance line in this triangle. And your take profit could be at this lower support line down here, where we have a support zone. I'm not sure if you guys can actually see my mouse or not.
I can see it, yeah.
Awesome. Yeah, so at this zone we have down here, or you can obviously do it at risk to reward levels. There's another support level we have here. Yeah, any notes, Austin?
No, that was great, right? Triangles are one of the most prevalent patterns that you're going to see in trading, and understanding when they kind of take place and recognizing them when they're there is very important. So,
definitely.
Yeah.
Good thing you get to go over your own.
Yeah. So this is the exact. Okay, guys, this is where it gets kind of confusing. You're going to say, well, why? What's the point of a symmetrical triangle if you like the breakout is like 50-50, right? You don't know what it's going to be doing. Well, they're useful because you know that it's a consolidation of price, right? Price is being compressed into a tinier and tinier point with less and less volatility, and it kind of indicates to you that a breakout, a very volatile and violent breakout, is on the horizon, right? So when we identify these symmetrical triangles, you're really just looking for that break, right? Which way is this thing going to break, either the bottom support zone or the top resistance zone, right? And you can see here in this case, this is a clear, perfect example of a trend continuation, right? So pretty much the trend was already coming down, right? The trend is your friend. I'm sure you've heard that before. And we saw a very nice bounce around, right? This could be looked at as, not only a symmetrical triangle, but perhaps just like a sideways like kind of channel, right? This could be viewed in a few different ways, but nonetheless, it's a very, very nice continuation pattern. The price action starts to get weak. We start to see price kind of really test the bottom area of that support, and then we saw a very confident break, thus showcasing the continuation. And yeah, this would have been a wonderful textbook trade to have taken just based off of support and resistance zone, right? Pattern recognition. So yeah, and unfortunately, Logan, right? There's no real way to tell which way a symmetrical triangle is going to break out until you see it happening, right? Should we touch on that? I mean,
yeah. You're absolutely right. There's no way of knowing, which is why you don't want to take this trade until you see the breakout. Some patterns you can rush it a little bit, as me and Austin sometimes do. That's, again, being aggressive, but also knowing that, let's say, if you're in a downward trending channel, that it's going to break to the upside, because we know that's a bullish continuation pattern, and vice versa for other different strategies. For different patterns.
And you're not only just going to be using the lines, right? You're going to be having other confluences helping you along, understanding better what's going on with the price action, right? You're going to be observing your relative strength index, your moving averages, your different oscillators like a MACD or stochastic, right? You're going to be doing a bunch of different things to give you as a good of idea as possible as to what's going on, right? On top of your pattern recognition, right? So
yeah, absolutely. So talking about channels and flags, here we have a bullish continuation pattern, which is a channel. So as you can see, it's the same thing as that we're looking at for triangles. It's two support or resistance lines that we have, and in this example, it is a channel because they are, as you can see, it's very straightforward. It's just like the shapes. It's a channel. So this was a downward trending channel. A downward trending channel is a trend continuation pattern, and as you can see, we are in a bullish impulse wave here. We then have our corrective pattern play out, where we then break to the upside, bounce back down to this zone that we set in this channel, and then continue again to the upside.
That's beautiful.
It is.
And it's definitely important to note, right, when we're looking at flags and we're looking at channels, one of the most important things to acknowledge is the entry of that that pattern, right? In which way was the stock or asset, equity, commodity, which way was it trending when it entered into it, right? What was the trend before this flag formed? We can see that it was bullish, right? So we can see we were in a bullish trend, and then this pattern was very much to the downside, and it allowed for kind of a consolidation in a continuation of this pattern. So this is really, really nice. And it definitely should be noted that you entered in a bullish manner, right? And then we went down, and then we broke out, right? If it was the opposite, if we entered this flag from the downside, right, there might be questions, and it might be a greater probability that we do end up continuing to the downside. Oftentimes, yes, flags will be continuation patterns. Same thing with channels.
Yes, yes. That is like rushing. Go back to the last example where I said rushing a little bit, being more aggressive. You know that this is going to break out to the upside. So if you see this zone form here, and you see this bounce, these two bounces here, you could say maybe I'm going to get a little bit better of an entry, be a little bit more aggressive. Stop loss would go below this zone, and then you would see if price then does move higher. Again, that's aggressive. I don't necessarily recommend that, but it's just a different way of going about it because you know this is most likely a continuation pattern. But the best entry, undoubtedly, is when a candle breaks to the upside or to the downside. In this case, to the upside, because this is a bullish continuation pattern.
Absolutely. And you know what? Not only do you have that blue support level drawn there, but if we could extend that channel, it kind of looks like a bump and run, right? Which was prior resistance kind of flipped into support, and then we just kind of, that was our launch pad that just took us up, right?
Yes.
Yeah, so very, very nice. This is perfect. I love that these are right next to each other. This is the same exact thing, guys, only completely reversed, right? So we had a bullish flag continuation pattern in our previous slide, and now we have a bearish one. And what's the main thing that I said before, right? You have to acknowledge what the trend already was. We can see that we entered into this flag with bearish price action, right? So this was more or less just a correction to the upside that quickly led to new lows, right? And you can see that as soon as we broke down from this flag pattern, as soon as we broke that local support, it did not waste any time bringing it to the downside. So, right, same exact ideology, just completely flipped in reverse.
Yeah, absolutely.
And these honestly make for the best trades. I'm going to be honest with you, right? Playing these patterns, playing these different continuation patterns, flags especially, they're awesome, right? And they can make for some really wonderful gains.
Absolutely. And here brings into another pattern that you'll see a lot. This is probably what I see the most, which is a wedge, which is pretty much any price pattern that you see coming together that doesn't have a distinct shape, like a triangle. So this is a wedge, or, like a flag, obviously. So this is a wedge. And again, the only thing we're using here is 2 touch points for our support or resistance lines, and it's going to be treated the same as a triangle. The entry is going to be on whatever way we break. So in this case, it is a continuation pattern. We break to the upside. The entry would be on this first candle that closes through the resistance. Stop loss would go below this last touch to the support line. But it's going to be treated pretty much the same.
Yep, exactly. Treated exactly the same. Yep, very much so. Awesome, guys. And I think that's about it, right, for these simple trading strategies that you can implement, right? Whether they be divergences compared to price and your secondary indicators, support and resistance zones, or just simple pattern recognition. These can be great ways to kind of build a foundation around a trading strategy that you could be developing, right? So I really encourage you guys to go mess around on the charts, go to TradingView. TradingView is free. You don't have to pay for the premium versions. Go over to TradingView, start drawing lines, right? Start looking for these patterns. Start giving yourself some experience in recognizing these things, because it will go a very long way when it comes to your decision making when trading. And it could help to build a wonderful strategy, which, Logan, I don't know about you, we use these things every single day.
Yeah, absolutely.
Yeah.
Absolutely.
Yeah,
So
we
you-
appreciate you guys joining. So I don't know how we're gonna be able to go about questions right now. Or do we want to hop back in chat? What's the
Well, I have my chat pulled up here, which is the
on YouTube?
Yeah,
Are we gonna be
I
looking
do
at
have the YouTube chat pulled up.
Yeah, cool.
So if anybody has any questions, be sure to throw them in the YouTube chat. We know that this is a little bit more different, I guess not really awkward, different than how we usually run it. So we'll do our best to see what we can handle here
Yeah,
in terms of questions.
Dylan Nault. I don't know how to say your last name. My apologies. Are there times when multiple patterns can occur and contradict each other? Ooh, I like that one. Logan, do you have any thoughts on that?
Yeah, I mean, this comes into a conversation that Austin and I have quite often, which is if you analyze anything far enough, you will see that there is always a time. There's always a pattern that is contradicting another pattern. So I think what's really important to understand here is that not every pattern is the same. Not everyone has the most significance. So it's your job as a trader, as an analyst, to find the most prevalent pattern, and then you need to trust your instincts and stick with that one.
Yeah, and I love that. I wasn't even gonna say that. That completely left my head. Right, if you analyze something enough, you will always find holes in it. Right, you'll always find weak points in whether that be an idea or anything else. Right, like if you buy a brand new pair of shoes, for example. If you step 10 feet away and look at them, they look perfect. But I guarantee you, if you took a magnifying glass, you might be able to see like a little chip of paint or like a crack or like something stupid, right? So, and that's the same thing with trading, right? You're always going to be able to, if you dig deep enough, you're always going to be able to find stuff that contradicts the current ideology you have. And it's your job to imply these different confluences to kind of help you pick the right decision, right? Are you ever going to see like, a bearish flag followed by a bullish flag? Like, I guess you could see these things, but you want to find the main pattern that's really with the trend, right? And a lot of that comes with experience and kind of doing it a lot for yourself, So.
Yeah, absolutely. Absolutely. How would you recommend a beginner trade following certain analysts while using these simple trading strategies in real time? How would you recommend a beginner trade following certain analysts while using... Yeah, okay. The message was contracted.
Well, I think it was still not a bad question. If you remember it, we could go ahead and touch on it.
His question was, how does a beginner trader go about following analyst plays and also trading their own trading strategy? And I think that that's pretty straightforward. I think that you would spend the majority of your time focusing on your own trading strategy because nobody's going to trade your own strategy as well as you are. You're not necessarily going to trade the same efficiency as my strategy as I am. So I think it's important that you focus on your own trading strategy. And whenever you see an analyst post a play that you like and that you understand, then I think that you should take that. But the priority should always be looking at your trading strategy. An analyst is just there to guide you and help you in an area where you may not understand or may not see an opportunity.
Yeah, any time that you're kind of taking an analyst play or you're taking, I guess you're letting the decision making kind of happen from somebody else, right? Whether it be investing, trading, or whatever, you should always do your own analyzing on top of it, right? Because everybody's risk profile is different, everybody's judgment is different, and it's very good, right? You're playing with your capital in this market, so the only person who's responsible for preserving that capital is you, right? Yourself. So regardless of the plays that are put out, you should always do your own due diligence on top of it, right? Because maybe sometimes you'll disagree. And, that it is what it is.
Yeah, absolutely. I think that's a really great point because sometimes I'll look, even with Austin's trades, and I'll see, okay, he posted this trade. Maybe we weren't talking about it at the time. So I'm going to go back and I'm going to see why did he take this? Why is he in this trade right now? And see if it's a trade that I also want to take. I'll do the same thing with Andy or Bull. If they post a trade, I'm going to go do my own due diligence on it and see if I see what they're seeing.
What did they see? Yeah.
Right.
Yeah.
So, Alex gave us a question from Live Chat VC Mute. Thank you very much, Alex. You are the greatest mod of all time. So I'm new to trading and I'm learning about all these patterns. At what point do patterns become too old? How far back are you looking on a stock to analyze the correct ongoing pattern? And I think you answered your own question in that question. You need to see what is ongoing at this current time. I think it depends. In terms of support or resistance zones, I'm going to go back very, very far in time. And I think it even really depends on like the time frame you're looking at. If you're looking at a monthly chart, you can go back pretty far. If you're looking at a 1 minute chart, you're obviously not going to go back multiple months to see what you're looking at. Or to see patterns that are going on right now, if that makes sense.
Right, right. And there's going to be patterns that are invalidated. There's going to be patterns that still remain valid. It's just about kind of recognizing what's going on at this very moment and what's going to help me, you know, be make a successful trade, right? So, right, it's like if you have a flag pattern, and we already broke out of that flag and we're well past it, right? It's like that doesn't need to be considered anymore. But if there's a support level or a resistance level from months ago that we could be running into soon, right? Like that's still very something that you should be keeping an eye on and should be considered in your decision making when trading. So, you know, a few different ways to kind of analyze. I would never say that a pattern like expires or goes old.
Except when it's invalidated. When it's invalidated, then it's gone.
Yeah.
And that obviously depends on what the pattern is.
Right.
But,
Right.
What is the value? What is the volume that us like beginner trades need to look in a stock in order for the strategy and patterns to be valid or work? What is the?
Okay.
Do you understand?
Yeah, I think he's just saying like if you're going to trade a penny stock with no volume, obviously the price action isn't going to be volatile, and oftentimes these patterns won't play out, right? In order for a lot of this stuff to work, you need to have an active market. So you're going to see a lot of these patterns play out in very liquid equities, right? A lot of stuff that a lot of people are trading, larger market cap equities. So you always want to look for volume. Anytime volume is stale, right, everything kind of just flies out the window and things just remain flat. But I mean, there's not like a specific number of volume you're looking for. Just is it an actively traded equity, right?
Yeah.
I don't recommend trading, day trading especially. I don't recommend trading stuff that not a lot of people are investing into, because that's just a recipe for disaster. When it comes to trading, investing is different because you have time on your side. But when you're trading options, right, in and out, you have an expiration, and you want to make sure that there's volume in said trade.
Definitely. Yeah. Okay. I definitely understand now. Everything that I trade has a lot of volume, so that's not really pertinent to me. What I would say is if it's gapping very often on the chart, then I would not use any strategy or even really trade it. Again, that would go back to maybe invest in it, but I wouldn't be actively trading.
And then other lower volume stuff, you're gonna have problems with your spreads on the option chain, and you're gonna get a shitty fill, and it's just not fun. So you definitely want to trading blue chips, trading stuff with attention, trading ETFs, trading indexes. They're always good. So
yeah. So
how do you draw the line percentage of how much capital do you daily trade, and how much do you buy in more of a longer term investment strategy? Okay, so I think what you're saying is for how much money would I put into a trade, and then how much money would I put into something that I'm investing into in the long term. Obviously, a trade, you don't want to do a very large portion of your overall capital, right? Typically, 2.5% to 5% per trade. Logan,
yeah.
What do you?
This goes back into our risk management conversation, which it largely depends. We've also done videos prior on risk management, but yeah, I think it does depend. For the most part, we're looking at 2.5% to 5%. I know people do go higher than that, so it's obviously going to vary depending on everyone, as we always say. How do I draw the line? So when I read that question, my initial response is, do you have a allocated percentage of your account that you're willing to risk it any day? And there's an allocated percentage of my account I'm willing to lose in any single day. For example, if I lose 2 trades or 3 trades in a day, I'm going to back away from the desk. I'm not going to trade anymore. That's my loss limit. But if I am winning trades, I'm not going to stop. Most likely, I'm going to press the pedal farther.
Yeah, and that happened Friday.
Yes.
Right.
Yes.
We were making some wonderful trades, but we were like, let's keep it running, pedal to the metal, man.
Right.
We're on a roll. So, and then when it comes to long-term investments, that's a fun one. I think long-term investing is that's the key to everything, man. Trading is great, but your long-term investments is really what's going to be the wealth generator for you. And I have most of my money, most of my capital that's under my name is in long-term investments, right? I don't really have, obviously I have some dry powder on the side. and I will take profits, when we get extended and I'm deep into the green. But you're definitely going to be way more aggressive with your long-term investing than your day trading. Way more aggressive, because you're right. If you're buying something for your long-term portfolio and it starts going down rapidly and you're down and you're right on the position, it might be better for you just to average down, because typically in your long-term investments you want to have conviction. And if you don't have conviction in your long-term trades or in your long-term investments, man, you're going to be toast. So, yeah, I don't know. It's different for everybody, but I'm definitely more aggressive with my long-term investing. Would you say you're the same, Logan?
Definitely. I'm the same way. You and I have pretty similarly allocated portfolios, actually. Most of my money, most of my net worth is in long-term investments. There's not a lot of it in my day trading. Of course, it's still like a sizable portion, but majority of it is still in long-term investments, for sure.
Yeah, long-term investing is huge. If none of you guys if you are in this chat right now and you are not building a long-term portfolio for yourself, what are you doing, man?
Right.
Or gal, what are you doing? Got to get that going, right?
It could be so many different things. It can be crypto. It could be a Roth IRA. It could be a equity portfolio. It really could be so many things. But
could be real estate. It could be anything,
absolutely.
right?
Yeah,
anything
absolutely.
that's going to appreciate in value over the long term is going to be huge for you, right? And it's very important to have that.
It could be the S&P 500.
Could be the S&P 500. Could be any ETF, right? Exchange traded fund. Could be anything.
Yeah. Cool.
Yeah, I mean, so I can't stress enough the importance of that, but really make sure that you have some sort of portfolio being developed. It'll go a long way.
Absolutely. So any more questions, anybody? We have a couple more minutes here.
Yeah, that was quite good, Logan, and I do think a lot of really important points were addressed today, and I think that for the people that were in here listening, I think that they will go out and they will start drawing support and resistance levels, understanding how their secondary indicators could provide them more insight into their trades, right? Understanding pattern recognition, it goes such a long ways. So
definitely.
Yeah.
And if you guys have any questions related to these trading strategies, I also put a video of another trading strategy on my YouTube channel recently. Any questions about any strategies and you're in the Discord, feel free to reach out to us anytime, and we are always glad to answer those questions. We're always glad to help.
Staying a little bit off topic, what are your quick speculations for this week, for the short upcoming trading week with SPY and other stocks trading lower than usual? Yeah, I mean, that's fine. We can talk a little bit about the market for a few minutes. I still remain relatively bearish. Obviously, the technicals recommend more or tell us more downside. And if you want to talk about that, obviously, I recommend joining our live calls that we have every day where we're constantly examining the market. And on top of our technicals being bearish, our fundamentals are rather questionable at the moment as well. So we'll have to see. Obviously, nobody knows the future. If we knew how SPY and yes, indexes and all that great stuff was going to open up on Tuesday, then we'd all be billionaires by now. So we're just going to have to wait and see and react instead of predict. So
cool.
Index annuities. Yeah, of course. Yep, there's plenty of ways to make money work for you. Plenty, right? You could go watch a book on passive income. Passive income's huge.
Yeah. Little off topic, would you guys recommend to build the capital to buy real estate with day trading? I think that yes.
Not a bad idea.
Yeah, I mean, if you are building capital day trading and you are looking to diversify your portfolio because you get to a size that you're happy with for your active trading portfolio, then yes, real estate is one of the things I would definitely recommend looking into, especially when you're getting into diversifying your portfolio for the long term. 100%. I'm starting to do the same thing right now. When RSI is on
go ahead, Logan. Go ahead.
When RSI is on divergence, how do we know if we reverse or if this is an indication that the trend is strong and the price action is continuing while indicators cool off? Great question. Spectacular question. The answer to that would be that you got to wait for confirmation, first of all. So if, for example, we see the divergence is telling us that we're going to come lower, then I'm going to wait for us to, look like we're coming lower. I'm not just going to rush the divergence because, yes, divergence can break. It often does break. You need to wait for the confirmation for sure. And then the other thing that I would say is combining confluence with that. That's why the strategy we went over today wasn't just divergence. It was a 50 moving average with an oscillating indicator. It was a list of confluences which help you identify if that divergence is going to stay strong and if it's going to move lower or higher, whatever it may be.
Yeah, divergences are fucking gnarly, man. Especially on the macro side. Wouldn't you say macro divergences are scary, right? You see
Definitely.
something on a higher time frame really riding up, challenging all-time highs, going into price discovery, and then you go look at your secondary indicators and you see that those macro indicators are looking, starting to retreat a little bit and they're starting to look bearish. It's like it really raises a lot of eyebrows as to what's going to be happening. And we saw a pretty crazy divergence play out on Bitcoin, right? When we first went up to around 62, 63, 64,000, whatever it was, when our first test of that kind of went up there, we had a massive divergence and we saw a large correction all the way down to around $28,000-$29,000. So that, that played out wonderfully. But yeah.
Absolutely. Cool. Well, we're coming up on an hour here, guys. If we have any last minute questions, we can take them. But if not, we can enjoy the rest of our weekend.
Absolutely. All right, guys. Yeah. So Logan, I think we can conclude here. If you guys do have questions right past this and we're gone and we're done with our stream here, you can always add us in chat, right? Because we're always, right, if I'm at my desk or not, same with Logan, we have Discord on our phones, right? The wonderful perk of technology. So we can always get back to you and answer any questions that you may have. So
yeah.
We also apologize for the technical difficulties. I know that kind of probably put a little, punch into today's, this week's biweekly call, but we'll make sure for next time that we get everything kind of situated and figured out so that doesn't happen again.
Absolutely. It was unfortunate, but it usually doesn't happen. So, we take it when it does. But yeah, thank everybody for coming. Once again, I'm going to say it every single time, intro and outro. We appreciate your time. We appreciate your attention. Hope you guys have a great extended weekend, and we'll see you at the desk on Tuesday.
Yep. Take it easy, guys. Peace out. Enjoy your weekend.